Hello and welcome to a brand new episode of The Big C, your one-stop destination to demystify all the commodity, cryptos and currency trades. I'm Manisha Gupta, and on the show today, I will be joined by Peter McGuire, who is the CEO at trading.com, and Kunal Shah is VP Head of Commodities at Nirmal Bang. Well, as always, before we get to our guests, let me get you up to the speed with what's happening in the markets. The stocks on Wall Street oscillate on Wednesday as investors juggle the U.S. Federal Reserve's interest rate decision and a quartet of high-profile earnings released after the closing bell. Meanwhile, the markets in Asia are trading lower as traders monitor the latest developments around West Asia. Back home, the Wall Street also sees a screen of red. On the commodities front, it is the crude oil prices crossing above $125 a barrel. This is following reports that the U.S. military would brief President Donald Trump on potential action, Iran heightening fears that the conflict could escalate further. Trump also reportedly rejected Tehran's proposal and reaffirmed that the U.S. will maintain its naval blockade until a nuclear agreement with Iran is reached. On the money market front, it is the Indian rupee that hits a record lows today at 95.26 versus the US dollar, crossing its previous low of 95.22. The Indian rupee is falling in line with other emerging market currencies, where you have the Singapore dollar from Philippine peso to Thai baht, all of that declining anywhere between 0.5% to 1% today. This, by the way, is the third weekly decline that the Indian rupee seems to be posting in. Joining me now is Peter McGuire, who is CEO at trading.com, and Kunal Shah is VP Head Commodities and Research at Nirmal Bang Securities. Gentlemen, hi, thank you so much for joining in. And a very difficult day, a truncated week for Indian markets, but so much more can happen over this very long weekend in the international space. Looking at the markets today, and Peter, this one is to you first. How are you looking at the crude oil prices? From 110 to 126 has come in very early.
Absolutely. Good afternoon, Manisha. I tell you what, the acceleration, and we spoke about it the other day, the acceleration and conviction, that's what I think traders were looking for. And boy, oh boy, did it deliver. 126.40 for, or 41 for Brent. You had nearly 111 for WTI. Big run-ups. And I'm a little speechless, and I don't get very speechless, but I tell you what, it's been very, very dynamic in Asia trade, and over the last probably 18 hours, maybe 130 is achievable, Manisha. I mean, it's a very hard one to speculate. There are so many components to this, but there's certainly a lot of fear in the market.
Kunal, just talking about the prices and the technicals, first of all, the implied volatility shows 30% on a day-to-day basis and 88% otherwise. I mean, that tells you that the crude prices can go to 80 or 140 on the higher side, given the IV numbers therein. How are you looking at that on charts?
Well, I think if you look what is happening on the ground, let us go to the main point, that is dated Brent, the physical delivery. So that contract is trading at almost $125. And if you look, if this crisis has to escalate further, and if there are, because we've already seen a disruption worth 14 and a half, 15 million barrels. So this number is quite big number when you talk from the production in a market of 105 million barrels of oil. If 15 million barrels is not coming into the market, then you can imagine the kind of problem it is going to create. And adding to that, we have seen refining capacity across the Middle East and across the different parts of the world, some because of fire, some because of malfunctioning, whatever. So even the refining capacity are getting expected. So the product market is getting even tighter further. So until we see any sign of blockade of Hormuz being removed by US and Iran both, then only the prices of oil are going to go down. The thumb rule for commodity is that the shortage, this kind of 15% shortage, you cannot predict the quantum of upside which is possible. So I cannot stick out my neck today and say that, okay, look, oil is going to top out today. I don't have any evidence to say that. And this upside can even continue going forward if nothing improves in next 3 days. So I just hope and I pray that something works out on the front of Hormuz, and there is some the blockade of Iran and US both is getting removed, and then there is a probability that oil can gradually come down. But before that, I don't see the structure of market. If you look, the backwardation are quite deep. Today is the expiry of Brent. And the current fund is trading at $122, but the farm fund is already trading at $113. So I believe that if there are no news, then the farm month also will rise quite sharply. So let us pray and hope. My charts are not going to work in this scenario. But the fundamentals are not bearish. We need some trigger and some sanity amongst the top leaders who are managing this crisis. So if they are getting some sanity and they really take a active call on this, then only this can improve. Otherwise, this is heading towards $130.
Peter, yeah, we're all praying and hoping, Kunal, as you tell us to do that. But Peter, when you look at the overall markets right now and the way the markets really have been moving, what has been your sense? I mean, are we looking at any demand destruction at all in prices at these levels?
Building on what Kunal said, I think there's so many components to this, Manisha. Yes, there's probably some demand destruction naturally across Asia if we're going to approach that 130, even 120. I'm sure that there's going to be hesitancy. People will change habits. We understand that. How that's going to be factored into consumption. One would think that you start taking public transport, you start paying. Let's use any country in Asia as a test case. If you start paying 30 and 40% more at the pump, you are going to change because the wallet and the purse isn't growing 30 or 40%, Manisha. So everything becomes more expensive. People change habits. And all of a sudden, there's less consumption. And that just seems to be the normal course of economic events. But again, how long that this lasts and what impact it has from a inflation standpoint, from a GDP standpoint, from a demand destruction standpoint, there is many different lenses and layers that are going to become ignited as this price starts to ratchet up, if it does ratchet up considerably from here.
And Kunal, a lot of people also believe that this price perhaps was in the coming. At $90 and $100, the markets were maybe mispricing the whole geopolitical scenario, and we didn't see a lot of buying instead. I mean, look at the overall market. The equity markets were rising, crude holding at around $100. But Street believes that this is finally markets pricing in on what really is happening and can happen going forward.
Yeah, so the markets were pricing oil to go down because there was continuous statement coming by the top world leaders that this is going to get solved. But it never got solved. In fact, the crisis got aggravated further. So I believe that if the key thing to watch out for oil market was Hormuz, and because that was choking off the supply. So right now there are no evidence which indicates that it's going to get open very fast. There is nobody. So even from the Iran point of view, if you look at this, we don't know whether the Iran foreign ministry is going to take the call or whether IRGC are going to take the call. And the top leader, ever since he's taken the charge, we've not seen him on television. So who is going to solve this crisis? So in order for US to remove the blockade or to Iran remove the blockade, there has to be some concrete discussion between two leaders and to arrive at some conclusion. So that is not taking place. So that's the reason why oil prices are behaving the way it is behaving right now, and it is out of control right now. One can clearly say on Monday the Brent was at $110. Right now it is at $125. So I believe until and unless we get a meaningful answer that when the blockade is going to happen, oil with the volatility is relatively going to remain higher, and it can even further go higher. I don't like to say that, but I have no choice but to say it. It is going to go higher. No point in predicting levels right now.
I get your point, yes. And even as various other countries already have seen higher fuel prices, India is the only one perhaps who hasn't done that. But the day is not too far off that we would be looking at higher petrol, diesel prices for the Indian markets as well. Peter, that being said about crude, a lot of people believe that it's going to be more about gas as we go ahead from here with what's happened with Qatar gas and the fact that you're looking at force majeure coming in from various companies. That is something that you will have to keep an eye on. Of course, petrochemicals, fertilizers, sulfuric acid, a lot of stuff seems to be suffering.
Absolutely. And the whole supply chain, Manisha, and the consumption chain, as far as all of the variants that are achieved from natural gas. And as you mentioned, from a fertilizer standpoint, what's going to happen to farming? What's going to be the cost added From a structure standpoint, some guys got 150 acres, 300 acres, small farms. Everyone's going to start having to pay more for all the life cycle of that particular crop, and from a plantation standpoint, from maturity, everything. So that's just one example. The other examples, as you mentioned, there's no doubt that gas is going to be, I think, very, very dynamic as far as, again, trading opportunities, big swings, and quite possibly you're going to see another leg up of price in the short to medium term. Uh, you know, all I'll say is we're very fortunate that we're not at the start of winter, but we're approaching more summer as far as Europe's concerned, and the impact as far as natural gas and all of the other side of the market. So it's many different lenses and moving parts.
Oh, it is the case, yes. So while it is about the crude oil prices, so Kunal, looking at the probability even now and with case scenarios, and this is a question to both of you really, and you go first on this, Kunal. So if this continues for one more month, where are we looking at crude oil prices? If the war continues, but the Strait of Hormuz is opened, where do we see crude prices then? And if there is a full resolution, which the markets believe is really not an offing, because there are a lot of things that both the countries seem to be asking for, how are we headed in various case scenarios from here on?
Okay, so the first scenario, if Hormuz continues to remain shut for another 1 month, oil is heading towards 140 to $145, and there's no doubt about it, because that's the point, where the supply is getting choked off. So that is the second scenario. The Hormuz gets open and the war continues. Even in that scenario, we don't know the kind of damage each Iran can inflict on the Middle Eastern countries, or the damage what US is going to do to Iran. So both things are not clear. But even in that scenario, oil prices will likely to remain higher. But the probability of that is not going to, because if you see, the blockade continues, but there is a ceasefire. Okay, so we assume and we feel that if this scenario continues, the second scenario will not come. And if you ask about both things happening together, ceasefire along with that, the blockade opens up. At that time, we are going to see oil going down by $15-20, but $90 for the Brent is going to remain a strong floor. It's not going to go below $90.
Okay. Peter, what's your sense in both the scenarios?
Yeah, I think probably, it's pretty hard to argue, that 140, 145 achievable, Manisha. Let's just see where we are over that month. I don't think there's been a better line than a month is a very long time in this market. What a couple of days. If I could quite easily be sitting here on the 30th of April saying Brent's at $75. The world is flowing, everything's over, and it's game on. That's not the case. So 145 has got to be some sort of line in the sand if it was to last another month with the same amount of response from both or from all parties concerned. In other words, there is not a deal on the table. If we do see that there is a peace deal put together, yeah, probably that 95, 90 is going to be a first headline for Brent. I want to see it under $100. And again, the conviction that it has as far from a bearish side, and whether there's going to be further push to the downside. We've also got to be considerate as far as UAE, what that places, and is this going to be a starting point for OPEC? And there is a degree of uncertainty in that whole decision also, Manisha, that has played this perfect storm, and that can't be discounted, because that is a contributor of what we've seen as far as price over the last couple of days. And no one knows other than the members where their viewpoints and their consideration is of remaining in OPEC.
Oh, well, absolutely. And UAE is the third country stepping out of OPEC, and a big one, really, because 12% of OPEC's output is contributed to by UAE. Kunal, you wanted to add something?
Yeah, I want to add one very big point right now. It's about the benchmark. I'm questioning the benchmark here. So right now, 105 million barrels of oil prices are linked to a benchmark called BFOE Brent, dated Brent, and the total production of that is not even a 2.5 million barrels. If you cumulatively, so that 2.5 million barrels of oil, okay, that benchmark is basically linked to the production of rest of the 102 million barrels. So I think the time has come, the way UAE has left the OPEC, and now going forward, I believe that world is in a need for a better benchmark rather than just sticking towards the old traditional dated Brent, because anyway the supply of that is not even 2.5 million barrels.
Mm,
So it is very difficult, in a scenario where the entire world is in a problem and we have linked our benchmark to
mm.
that 2.5 million barrels. It's not going to work. So I think the time has come that world needs a better benchmark than a Brent crude oil prices.
Oh, well, changing world map when it comes to crude oil is something that has been in work for some time, and this perhaps just pushes that agenda even further. Well, gentlemen, we'll have to go for a break. This has been a conversation about crude oil, but once we return from that break, we will be talking about gold and silver, because remember, these are those precious metals which have continued to decline for a third straight week into this week as well. We'll come back and take a look at the gold prices now, because we have seen a range of $4,100 to $4,800 an ounce since the West Asia conflict has begun. The immediate decline was into the markets, and then we saw some gains coming in, but back around at 4,600, some bit of a buying coming in right now. Peter, what's your sense now for the gold prices? The kind of pressure that we are looking at here. One, of course, there is money flowing into energy. Second is that the markets believe there's not going to be an interest rate cut, maybe a hike.
Yes, I mean, when you look at it and examine it, Manisha, let's just have a quick look at the 10-year. You've got a 4.42. I just can't believe it as far as 10-year. And you've got, I think it's around about 3.9 odd, 392 for a 2-year. So it's very, very strong. US dollar index sitting, running at around about that high 98. So gold hasn't been the flavor. It's all been crude led as far as from a trading perspective, big volatility swings, as we know. I'm expecting gold to probably wait to get through this geopolitical concern. Second half of the year, it's going to be stronger than where we saw it earlier in the sense of 5,400 highs. So I think 6,000 is achievable. And there's a lot of water to pass under the bridge over the next, 7 months or 8 months till the end of the year.
Kunal, what's your sense from 5,600 of an all-time high to 4,600 currently on the screens? How are you looking at this one?
So yeah, if you look at the gold from the COMEX point of view, I believe that looking at the way the inflationary expectation have surged, so in a shorter term, gold prices may remain under pressure and the upside may be relatively capped. But the moment there is this Hormuz blockade is removed, at that time, I think gold will shoot up quite sharply because it changes everything. Right now, all the financial models are indicating that the interest rates are going to stay higher for a longer, or perhaps there'll be need for a higher interest rate. So I think that is basically denting the gold's appeal. Another thing, in the first quarter, we've seen net selling of gold by the central banks after a long time, last quarter. And now that brings very interesting scenario in a time when central banks were the major driver of the gold demand. This year it will be very challenging and it will be very difficult that central bank will buy 800 tons of gold as compared to last year 850, and before that more than 1000 tons. So that is one. Second, from last 15-20 days we are constantly seeing ETF, global ETF, there has been a redemption going on in gold, so that is negative. And jewelry demand is quite balanced. So all the three major demand drivers are showing subdued growth signs, and that makes me believe that gold can head lower towards 4,400 to 4,350, and perhaps from that levels, you can again start rebuilding your position, and my target will be $5,500 for the end of the year. That's it.
And Kunal, how are you looking at the silver prices? We've come down from 120 to around 70, 72 right now.
I think it can slip and test levels of $65 because of the same reasons I've mentioned. But I think the fundamental outlook of silver remains quite bright going forward. with whatever is happening with the silver ion batteries. Apart from Samsung, a lot of producers are working towards making a silver ion batteries, which is a new thing purely. And now this segment can add up to another 5 to 10% of the total silver demand. So this remains to be seen how the commercial selling of this battery takes place, when it takes place. But I think that makes silver very interesting. So around 2 lakh 10,000, 2 lakh 15,000 should be a good levels to accumulate silver. And it can again potentially test 90 to $95 by the end of this year or mid next year.
All right. So it can go to 65, but it also can go to 95 by the middle of next year. Peter, how are you looking at silver? Would you also buy it at these levels, or you think there's more decline coming?
Oh, I think it's good time to buy, Manisha. You might save a couple of bucks if you're buying physical, and it goes to 68 and you kick yourself, but all of a sudden then it's at 85 and you go, well, very hard to pick the bottom. And for a lot of investors, they're very, very long silver. They buy into the story. They're across all of the I think all of the opportunities that are going to be presented, and a lot have already been presented. And that taking it to 121 was a wake-up call. That really engaged a lot of people across the world to say, I want to be a part of this. And I truly believe it's through $100 by end of year, very achievable. And let's just see again, conviction and acceleration to get there. And if it does, then it's off to the races again in 2027.
All right. Gentlemen, before we wind down this conversation, one more headline that commands attention clearly is the Indian rupee. And Kunal, yet another all-time low for the Indian currency. Where are you looking at this one?
Well, if oil continues to remain up, I think another percentage-wise 2 to 3% weakness can be warranted. It is all linked to oil, and right now it seems that oil is not stopping. So I would say another 1.5 to 2% upside, 90, perhaps 97, that kind of levels is very much possible. But once the oil takes a U-turn, believe me, the rupee is the first one to going to react, because the reason why rupee is 95.20 is because of oil, nothing else. So just hope and pray that oil tops out here. I just have a strong intuition that it should not go above this level, because the disruption it is going to cause to the world will be quite irreparable, and at a time when the global debt is so high. So I think the sanity should prevail, and in next 2 3 days, let us hope that this blockade gets removed.
All right. A lot of hoping and a lot of praying in place there.
Yeah.
Absolutely. There's a lot of international cues that we're looking at right now, which need moving on in the positive sense there. But thank you so much, gentlemen, for joining in. And with that, that's all the time that we have on this episode. Thank you for watching.